I'm good, sir. How
Hey,
are you?
I'm good. Where Gomba still?
No, I came back to JB already after Chinese New Year.
Oh, I see. It's very good. No, what you say, like when you follow like a company law, strategic management, that's all in semester two. You change it. And then now they say business research must come to semester one. That's why your batch it was a little bit of different thing, modules.
Oh,
You all need to do your research before you get into semester three, so you takes time. So what Dr. Karthik did was I give you the opening of research. Then you said, oh, you start getting the interest of doing research. Oh, what are you going to do for your DBA? How to write articles for Scopus journals, all these kind of things. But at least you know something. Okay, I got to start the other class.
okay,
Thank you,
doctor.
sir.
Okay, right. In
ஹாய் ஹாய் லதா. ஹாய்க்கா.
Hi, Venu.
எப்படி இருக்கீங்க?
நல்லா இருக்கேன். நீங்க எப்படி இருக்கீங்க?
ஏதோ ஓடுது.
You're from Kedah, is it?
நோ பேரா.
Oh, Perak, is it? Okay.
சாப்பிட்டீங்களா?
Actually, halfway through my meal, ஏன்னா நான் மீல் கொஞ்சம் கொஞ்சமா சாப்பிடுவேன். அந்த like I don't take meal directly like வச்சு வச்சு சாப்பிடுவேன்.
ஓ, லைக் மை மாம்.
Okay, because I'm a diabetic patient, so I will take my meals, break up meals.
Injection, the insulin is injection or just pill?
Yeah, I'm on insulin once per day. That's night
Oh.
insulin. Long, they call it like a slow release.
Mm-hmm.
So I take my insulin. எனக்கு நினைக்கிறேன் I'm already 20 years I'm on diabetics.
ஐயோ, ஜெனத்திக்காக்கா?
Yeah, genetic.
ஓ,
Genetic வேலை stress.
ஆமா.
So you're working in Perak in a
மேனுஃபேக்சரிங்
manufacturing. Okay.
glove company.
Oh, yeah, I know. I only know Top Glove.
No, it's a YTY.
Oh, okay. I have heard of it.
Yeah.
What it YTL or YTY?
YTY.
Okay.
YTL more to cement,
Yeah.
yeah,
Because
hotel.
been to Johor Bahru?
நான் வந்திருக்கேன்.
Okay. Graduation எல்லாம் வரணும்ல.
எத்தனை பிள்ளைங்கக்கா?
I got two daughters and ரெண்டு மகளுங்களும் கேரள இருக்காளுங்க.
ம்ஹும்.
Hometown is Johor Bahru, but we quite have settled in KL because I
ஓ,
needed a home base house. So
ஆமா.
ரெண்டு பேருமே அங்கதான் இருக்காளுங்க. One is working in the bank and the other one is studying.
ஓகே.
Okay, I have very grown up children, 29 and 23.
குட்கா. நான் இப்பதான் 9 வயசு பையன்.
Okay, great. நாங்களாம் அதெல்லாம் பாஸ் த்ரூ பண்ணிட்டோம். ஹாய் விசாலாட்சி. நிறைய இந்தியன்ஸ் தான் நம்ம டீம்ல.
ஆமாக்கா. அக்கா, நீங்க ஆயில் அண்ட் கேஸாக்கா?
யா.
நான் முன்ன சப்பூரா கஞ்சானா
வா, எத்தனை வருஷம் முன்னாடி?
ஃபியூ 8 or 10 years before.
ம். என்ன ப்ராஜெக்ட் செஞ்சீங்க?
Bechtel project, Mumbai.
ஓகே. I was on client based for Shell Prelude. I was with Shell that time.
Uh-huh. என் wife still சப்பூரா.
What's the name?
HR.
Oh, Blue Moon.
Yes.
இந்தியன்ஸ் இருக்காங்கன்னா இந்தியன் பீப்புளை பார்க்கவே இல்லையே. நான் போலாம் ஒரு
எப்ப
10
போய்
வருஷம்.
ஒரு 10 வருஷமா? உமையால்
Oh, maybe I know her, Umayal.
முன்ன 10 வருஷம் பிரியா.
I don't know because நாங்க வந்து கிளையண்ட் சைட்ல உள்ளவங்க.
ஓ, கண்டிப்பா ஹெச்ஆர் பிரீஃபிங்கோட
மீட்டிங்ல ஏதாவது பார்த்திருப்பேன் நானு. I wouldn't have noticed.
இது பேசலாம் ரெக்கார்ட் பண்ணியிருப்பேன்.
அவர் delete பண்ணிடுவாரு சார்.
டிசிஸ்லாம் எப்படி ஓடுதுக்கா?
ஒரு மாதிரியா போகுது. ஆக்சுவலி ஓப்பனிங்க மட்டும் செஞ்சு வச்சிருக்கோம் நாங்க எங்க டீம்.
ஓகே, அட்லீஸ்ட் குட்.
அப்புறம் என்ன செஞ்சோம்னா யார் யார் எந்தெந்த டாபிக் ஃபர்ஸ்ட்
ஆஹா,
சாப்டர்ல யார் யார் என்ன செய்யணும் எல்லாத்தையும் டிவைட் பண்ணி கொடுத்தாச்சு.
ஓகே.
அந்த வேலையெல்லாம் வந்து டிவைட் பண்றதுல கரெக்டா செஞ்சாச்சு. How about your team?
ஒன்னும் ஸ்டார்ட் பண்ணல ஆக்சுவலி, ஜஸ்ட் டிஸ்கஷன். வில் சூன்.
Yeah, but for us, we will divide first. Okay, we'll say everybody comes up. Okay, what you all have written, then we'll meet up, then we'll say, okay, நீங்க இது வரைக்கும் எழுதிருக்கீங்க, நான் இது வரைக்கும் எழுதிக்கிறேன். Then we'll try to put it together.
ஓகே.
நான் எப்போதுமே அப்படிதான் நான் எங்க டீம் அப்படிதான் செய்வேன். ஸ்ட்ராட்டஜிக்கலி அட்டாக் பண்றது நாங்களாம். ஓகே, ஒரு ஆள் ஒரு டாபிக்
That's actually good. Okay.
then they will like we all will come online one day. Then ஓகே, அது வரதுக்கு முன்னாடி we will ask them to கொடுக்க சொல்லிடுவாங்க. முத என்கிட்ட கொடுக்க சொல்லிடுவாங்க. நான் எல்லாத்தையும் கம்பைல் பண்ணி இப்போ நீங்க சாப்டர் 1 சாப்டர் 2 சாப்டர் 3 கம்பைல் பண்ணி நான் ப்ரூஃப் ரீட் பண்ணிடுவேன்.
ஓகே.
Then only okay, ப்ரூஃப் ரீடிங்ல இது ப்ராப்ளம், கேன் வி ஜஸ்ட் லைக் ரீடு இட். அப்புறம் ஒரு 2 தடவை review பண்ணுவோம். அதுதான் சொன்னாங்க.
குட்க்கா. வணக்கண்ணே.
வணக்கம் ப்ரோ.
வணக்கண்ணே.
Hello, hello.
Hi.
Hi, Lata.
Julia，你这个相片很美嘞，看起来才25岁。
OK，谢谢大哥。
我以为你没有听到。你以前拍的，刚刚拍的，
这个应该拍3年前吧。
这样美早早就放出来了，就很有这个有 value，你知道吗？
OK，可以可以。
你的会不会做了？
还没
哎呦，惨了，我都没有动。
还没开始。Not yet start。
还没散了。唉，我做完了那个什么那个美丽法，轻松很多。
是咯，终于卸下责任了啊，不用去头痛了。
是咯，有时这个东西是这样的。现在有啊，现在又 appoint 我回去帮马六甲了，够力。
你 experience 吗？
没有了，马六甲的话，他们那个 organizer 都没有决定，都没有就是 commit 要全去进行哦，够力现在。
啊？还没有找到 speaker 了啦。
我现在找给他咯，我们要找给他咯。要怎么办？哎呀，总行啊，不会，我又是 committee 够力，你看啊，那现在考试要解决，所以我想要叫你做顾问的喂。
顾问？什么顾问？我都不是顾问。
可以啊，不然的嘛，可以做冰城顾问嘛。没有，我跟你讲啊，他真的这样搞下去啊，他不够人去上，很难干。他在他那边哦，可以容纳700个人罢了，那个 hotel 啊，睡搞得很小。
OK，
很贵哦。
它是 expensive，肯定啊。
但是还比冰城好了。
冰城啊，会有很
冰城
难做。
找不到一个好的 hotel 不会这么贵的，没有没。
Island 应该找不到啊。
假如是那个呢 ，Seberang 呢？
Seberang 啊，那个改天我们见了再谈看。你要跟我讲大概多少钱，我才跟你讲，我才找看。
我叫你冰城做了，不是我们做。
然后我们冰城的很多在里面吗？
没有，
你看他们
2027年。
2027年啊。
因为我们现在要1倍了嘞。
Okay, good evening, everyone.
Okay.
Good evening, Dr. Jerome.
Hopefully,
Good evening.
Good evening.
good
Good
mood
evening.
today. Welcome
Good
back.
evening, Professor.
Okay. So I think Al is not here today, so I will get the class going. I have sent you all on the chat group a lot of material for you all to go through because corporate finance is a challenging module. Let me share with you all. But whatever it is, I'm here to support you all. So if you feel
Doctor, your sound very soft.
very soft, cannot hear me. Okay, let me try and see. 1 minute. What about the rest of it? 1 minute.
Not here clear.
Is it
So
soft
maybe
for
you
the
have to
rest
move the
also?
mic nearer to your mouth.
Can you all hear me?
No, it's very low.
Very?
Very low. Your sound is very, very low. That is,
Very low. Okay, let me try and see whether I can make now better.
Still the same.
Same.
Still the same. Okay.
Maybe
Jimmy,
volume, but you adjust volume.
I adjusted my volume to the maximum already. So maybe you all have to adjust your volume because that's the best I can do. I'm not sure. Maybe there's something wrong.
Maybe
with,
you plug and plug and see.
plug and unplug a few times already. Now see how? Is it okay?
still the same.
Cannot hear.
Unless maybe you all can use is put in inside the laptop using earphone. Then only you can hear
Maybe
more
you all can
better.
use the earphone.
If
Okay, no
we
choice.
just a speaker, maybe it's not so
Correct.
clear.
Thank you, madam. Very good suggestion. I also using earphone, so no choice. Okay, so let's get started because we got quite a lot of things to cover. So I'm going to share my screen. Give me a minute. Okay. Right. Okay. So you can see my screen?
Cannot.
Cannot see.
Only Zoom only. Can see Zoom.
Correct. Zoom lah.
Correct.
Okay, now we are coming to the notes lah. So when we come to the notes, I'll share with you the notes. Okay, let's see the material that I emailed to you all. This material that I'm going to go through with you all now is all provided already, so you can have a look at it. Okay, let's start. Number 1, let's go through your syllabus. Okay, let's go through your syllabus. Give me a minute. Let me pull it out. Syllabus. Okay, so let's look at your syllabus first. That's the first material that we will refer to. Okay. Okay, can you see my screen now? Is it clear?
Can.
Okay,
Can.
I will talk as loud as I can now. My house, everybody will get a free lecture tonight. Because I'm shouting. But we'll try to make sure that you understand. If you cannot hear, by any means, please let me know, and then I will speak a little bit more louder. Okay, so let's look at our syllabus. This is our syllabus that we are going to cover in the next few weeks. Now, I know it's a little bit of a rush because I had a few events in the earlier part of the month, so I could not have the classes. But I thank you all for accommodating my request. Thank you so much. So today, Thursday, 27th of February, we will cover the finance and financial management and ratio analysis. Okay. Now these chapters here that you can see, they are the chapters from the. Okay. Can you all mute your mic? Your camera can on is good, but your mic must mute. Because if you cough or if you shout in the house or if you're having a conversation with somebody at home, we all can hear. So try to mute your mic. Always check your mic to make sure it is muted. Okay, let me continue. Then the next class will be on the 4th of March. That is next Tuesday. We will cover time value of money and and investment decision. Katiban, can you mute your mic, please? Katiban, please mute your mic. Katiban, please mute your mic. Investment decision, that will be covered next Tuesday. Then next Thursday, we will look at sources of finance, working capital management. And then the following Tuesday, we will, next Tuesday, then Thursday, the following Tuesday, we will look at cash flow and financial planning and corporate governance. Now, the material that I have provided you will be referred from the recommended textbook. Now, this is the recommended textbook. So if you go to Google and type this link, you will get the textbook. Okay, go to Google and type this link, you will get the textbook. And you can refer to the pages on the textbook, chapter 1 and 2 for today's class. Chapter 3 also will be for today's class. Next week, next Tuesday, we will look at time value of money, then will be chapter 5, so on and so forth. Now, briefing on the group assignment, normally I do in the second class, but I'm going to do it tonight. So if I do it tonight, then I won't be repeating it tomorrow, next week. But if you got any questions about the group assignment, please do not hesitate to come back to me. I prefer you ask me in class. Don't personally WhatsApp me, because when you ask me in class, everybody learn. Okay, everybody in attendance will learn. Okay, so try to confine your questions on the assignment during class time. Okay, now there is one group assignment which I'm going to show you shortly. This will be distributed to students today to be submitted by the deadline of the 18th of March, 12 noon. 12 noon. My email address I will pass to you. Okay, I'll pass to you my email address shortly. The link to the YouTube video of the presentation of the assignment must be included in the soft copy of the assignment and must be clearly mentioned on the front cover of the assignment. Besides this, the front cover of the assignment must also list all the names of the group members according to your IC, according to your IC, because when I submit your marks to UTM, they follow your name and your student number. But to me, the most important thing is your name. So make sure you get your name correct. The assignment must be submitted in soft copy to my email. This is my email. The file name must be in the format of group leader's name dash corporate finance assignment dash UTM space. Okay, so you just put your group leader, who's your group leader, the name on your file. That will be how I will denote your assignment. Now, group leaders are tasked to ensure compliance, as marks will be deducted for non-compliance. So make sure these matters and the matters that I'm going to discuss later with regard to the group assignment are complied with. Because we want to make sure everything is done professionally. And Al, I think, has mentioned this to you, that MQA or the authorities normally do inspection. So when they come and do inspection, they want to make sure that the content of the assignment, the way the assignment is done, everything is very professional. Okay, today we got ChatGPT. So you all got to make sure that whatever that you do on ChatGPT, you must inform us. For example, but this is maths lah. So it's going to be a bit challenging for you all. But if you use ChatGPT, let me know in the assignment how you use ChatGPT, so that I also, when I'm marking, I will take note. The same thing with, nowadays we got many tools. We got Gemini, we got ChatGPT, and we got DeepSeek. So if you're going to use these tools, make sure you mention in the assignment under a note that your group use ChatGPT for what? What are the areas you use? And of course, if you copy and paste, marks will be deducted. But if you use your own words, then I will give you marks accordingly. Okay, right. So don't worry too much. Today is only the first class, so I'm sure you need some time to go through all this. And when you go through, you'll be able to understand. Okay, So today, 27th of February, we will look at the first topic shortly. Okay, right. Any questions so far? Okay, no problem. Right, so let's go to the next item. Okay, the next item that I sent to you today was your assignment. Okay, so your group assignment here. Okay, so this is your group assignment. Now your group assignment comprised of 3 questions. Okay, so let me talk to you about the group assignment first. Now the due date is 18th of March. This is 1 week after the 11th of March, which is our last class. Okay, so the weightage is 100 marks. And the focus of the assignment is on this. Explain some of the basic tools and techniques of finance, such as ratios, time value of money, risk, return models, portfolio theory, and others, including applying these principles in real-life situations. Okay, so the assignment objective. The objective is this assignment is to solve the questions and problems of the concepts covered in this module. Attention should be paid to the provided marking rubric for guidance on expectation. This assignment consists of problems from different topics. You are required to solve all the questions and problems based on each topic. Your solutions must contain strategies, computation, execution of each question and problem as per the requirement of each task. Okay, so there is a condition here for late submission. So try to submit on the 18th, 12 noon. Right, now these are the deliverables. I'm sure you can go through. So some of y'all may be concerned about the font size. I've listed the font size, 1.5 spacing, 1 inch margin, A4. Okay, and then a little bit about the presentation here. The presentation for the assignment must be 15 minutes, where each member is expected to present a particular part of the overall assignment. The presentation video must be then uploaded on YouTube and the link provided in the assignment report submitted. Where necessary, additional marks will be provided if citations are made and reference list is provided. Students are expected to do the assignment on their own effort, and any attempts to plagiarize or the use of AI without references provided or declarations made can be penalized depending on the severity of the infringement. Okay, so UTM Space pays a lot of attention for original work. So that's why I'm very particular about that. You got to make sure that your work is original, your own work, and you're working in a group. So it should not be a difficult task because you can assign. Today itself, maybe after the class, you want to have a 5-minute session where you can assign certain people in your group to do the assignment. Now take note, the maximum number of group members should be 5 but Al has asked me to let you all have 6 as a maximum member, but the minimum is 3. Minimum is 3, maximum is 5 or 6. Okay, exceptionally, I will allow 6, but try not to make it more than 6. Okay, right. The overall assignment will be marked against 80% of the marks. The presentation will be marked against the remaining 20%. So for the presentation part, I will allocate 20% of the mark. The assignment will be 80%. Now, let's look at the assignment. The assignment comprises of 3 questions. Now, this is a finance paper. Okay, so a finance paper must have figures. If you don't have figures, it's not finance. Okay, so there can be some theory parts, but the most important thing is you must be able to understand the figures, okay, and interpret the information. That's important. Okay, so your group has been appointed to undertake an analysis of this company, SECCC, Sendirian Berhad. For your part, you have calculated the following ratios. So tonight we will look at ratios. So these are ratios that you have calculated. And then based on these ratios, you are supposed to draft a written report analyzing the ratios that you have calculated. What are the key points of analysis that you would include in your draft report? Okay, so there are two questions here. One is to generate a first draft, and the second part of the question is what are the key points of analysis that you would include in your draft report. So when you draft your report, what are the key points? Maybe you can summarize the key points in your conclusion of your report. Okay, then we go to question number 2. Your group is developing next year's financial plan for Haloba Berhad, a medium-sized manufacturing company that is currently operating at 80% of the factory's capacity. The firm is launching a sales promotion that's expected to generate a sudden 20% increase in revenue starting at the beginning of the new year. Unlike current sales, which are virtually all on credit, approximately 50% of the new business will be paid in cash. No changes are planned in the company's operations other than acquiring the resources necessary to support the sales growth. Develop some reasonable planning assumptions for the following statement of financial position, balance sheet line items, and explain your reasoning for each. Now, which balance sheet items will be affected by an increase in sales? Proportionately or less than proportionately, assume any additional cash needed is borrowed. Now, what this question is asking you is to plan. It's a plan for you to come out with assumptions that the company is going to produce based on the information given in the first paragraph there. And these are the areas that you need to focus on. Okay, so it's not a budget. You're not going to prepare a budget. You are just going to base your assumptions and then come out with a plan. Come out with a plan. Question number 3. Okay, Toyoma Berhad imports and distributes sunglasses in Johor. The company's peak season has just passed and forecasted sales for next few months is shown in the top row of the table. 40% of sales are cash and are collected in the month of sale. 60% sales are on credit and are collected in the month following the sale. Toyoma purchases merchandise 1 month in advance of sales, and the cost of goods sold is 70% of sales. Toyoma's suppliers are paid 1 month after the purchase. General and administrative expenses are 6,750 a month. Interest payments are 200 per month. Cool looks will begin with, I think there's a typing error here. So it should be Toyoma Berhad. I'll correct it and upload it later. So this should be Toyoma Berhad will begin September with a cash balance of 10,000. Okay, so this is the statement. This is the statement. So you are supposed to fill in the figures based on the information in this paragraph. Now, this one, you do not need to do any analysis. Okay, just calculate. Referring to Toyoma's information, what are total cash inflow? So referring to Toyoma information, what are its purchases in October? Referring to Toyoma's information, what are total cash disbursement? Referring to Toyoma's information, what is the cash balance? Okay, and then you complete the sales forecast and cash budget table as provided above. So you just have to fill up these figures and answer these 4 questions here. A to D, E asks you to complete these figures. Okay, so these are the 3 assignments that 3 assignment questions that you have. Okay, I know you may not have any questions now, but doesn't matter. Okay, you can go through it at your own time, and then any questions you can ask me. Okay, so I got one mistake here. I will correct the mistake, and then I will send you a new copy. This is not Cool Looks, it's Toyoma Berhad. Okay, right. Any questions? I think at this juncture, you all are more more concerned. But don't worry. We'll see how it goes. You still got about 3 weeks to submit. So don't worry too much. So I just pass you the assignment first. You can already start to set up your groups and start to discuss.
Excuse me, Professor, I have a question.
Okay.
Vilashini here.
Yes.
So the thing is, you told we can maximum 6% in a group, right?
Yeah.
But then there's a time limitation of 15 minutes per group.
Yeah.
So
Yeah.
when
So
if
what you can do is, if 6 person, maybe one person can do 1 minute, 2 minute, or 3 minute lah. You know.
Okay.
Or if you can't get all the 6 involved, then maybe 4 also can.
Okay.
But there must be some form of teamwork lah. I don't want one person presenting the whole presentation of 15 minutes. Okay.
Because
So
for the OB, we had this difficulty. We had to
understood.
crop a
Yeah.
lot of our input.
So what you can do is, I mean, it's up to you lah. You are Vilashini, your own creativity lah. What you all can do is maybe one person can do question number 1, another person do question number 2, another person do question number 3. It's fine. Okay, but I just want to see some teamwork lah. You know, I have problem where one person or 2 person monopolize the presentation, then it becomes a problem.
Okay. So that means we can do 3 or 4 person do the presentation.
No problem.
Okay.
No problem. I'm not very particular as long as number 1, everybody work on the assignment. That means if you got 6 people, all the 6 must do something. Okay, so the presentation you can have 3 or 4, but don't have 1 or 2 lah. Then it's still not that good.
Okay.
So try to get at least a maximum of 6 will be great, but a minimum of 3 or 4 is acceptable.
Okay. So if 3 or 4 present, the mark will not be penalized, right?
No. I won't penalize mark.
Okay. Wanted
The
to clear
most
on that.
important thing is make sure everybody participate in the assignment. That's why the role of the group leader is very important. The group leader must make sure everybody do their part. The learning, you know, there are sometimes, I think you all studied in OB with me. There is a situation where 1 or 2 members keep quiet, don't do anything. That's why I don't like a group to be too big. You see, when you have a group that is too big, the probability of 1 or 2 members not doing anything is very high. So that's why I prefer to have a maximum of 5. But Al has always come back to me and said 5 is too little. He wants 6. Okay, so I allow 6, but the group leader must make sure everybody participate. Okay?
Okay, thank you very much.
Welcome. Right. Any other questions from any other groups or the same group? How many groups are there? 3 groups, is it? 3 or 4 groups here?
Praveen, group 1.
You're in group 1, okay.
Lata, group 2.
Okay, so Vilasini is group 1, Lata is group 2, okay.
My group consists of 4 more people, including
doesn't
me,
matter.
5.
Doesn't matter. 5 is fine. Who is the third group?
Steven here.
Hi Steven, welcome back.
How are you?
Okay,
Yeah.
Steven. A lot of things have been happening, so been very busy. Thank you, Steven. Okay, so your group is number 3, yeah?
Yeah.
Okay. Any other group?
J3 group.
Venu. Venu, is it?
Yes.
Venu, your group is group number 3, yeah?
Number 4.
Sorry, number 4. Okay. Any other group? Is there a 5th group here?
I think no.
No, okay. So I think 4 groups will be beautiful. Now there's one.
Professor,
Visa
Lachi here from group 4.
Yes, Visa.
Okay, we are 7 of us. I just
Cannot. 7, you have to break. There cannot be 7 in a group.
we already 7 here.
No need. You have to break. So one group can be 4, another group can be 3. So Visa,
Okay.
you go and talk to your members.
Okay.
I won't allow 7.
All right.
So I'm telling you now on the first day. So we go from there lah.
All
So
right.
it's up to you lah. How you want to break it up? No problem.
We will discuss with the leader and
Thank you lah. Fantastic Visa.
Thank you, sir.
That's what I want. I want teamwork, and I want, issues like this must be solved at the beginning. Then you're all very clear. Okay.
All right.
Thank you, Visa. Thank you so much.
Thank you, Professor.
Right. Okay. So any other concerns? What about the other groups? Do you have anything more than 6? Any group more than 6? Stephen, your group, how many members, Stephen?
We have 5, Prof.
5. Beautiful, Stephen. Fantastic. Lata?
Sir, I only have 5 people in my group, including me.
Fantastic, Lata. Fantastic. Vila, how many members in your group?
6 of us, Professor.
6. Okay, that's fine. 6 is beautiful. Okay, right. Thank you very much, everyone. So I think don't worry about the assignment. The most important thing is start to talk about it. Today itself, maybe after the class, you take about 10 minutes, sit down and talk about it, so that you all can start to do. Time is not on your side because this week we have got 3 weeks to go. With this week involved 3 weeks to go. Okay, so try to complete it by that time. We'll see how it goes. We'll see how it goes. Okay, right. So with that, we can go into today's class. Now, if you look at the material that I have sent to you earlier today, there was some material that I sent. So let me run through the material with you first so that you are aware. So the first set of notes that I distributed this morning, I think, was Introduction to Finance. Okay, so this is a set of notes talking to you about what happened in the financial world over the past few years, how finance has become a very important topic today. Okay, so you can use this as a good way to understand what are the different areas of finance that we will be looking at. Okay, so you can read up on your own leisure. So this is one. The next item that I sent to you was the ratio analysis. Okay, ratio analysis is a very important topic. Your assignment, you will notice one full question and one part question on ratio analysis. So this is a very important area. So I have provided you again with so much of notes for you to understand. Now, this will be supplemented later after the class with my PowerPoint slides. I'll send you my PowerPoint slides as well. So you can use the PowerPoint slide and the notes and you can understand the topic clearer. Clearer. Okay, so these are the 2 sets of notes that I have sent to you all. Okay, so now we go into today's topic and there are 2 parts to our class. The first part will take me about half an hour and the second part will take me slightly more than an hour. Okay, so we look at the first part first. Okay, so let's start. Okay, so this word finance, what comes to your mind? Let's start with Vila sini lah. When we talk about this word finance, what comes to your mind?
Managing cash flow.
Very good. Managing cash flow. Very good. Okay, thank you, Vila. Next will be Venu. When you hear the word finance, what comes to your mind?
Money.
Money. Very good. Money. So that's a very important word. This word money. Okay, so finance deals with money. Okay, so Vila, you are also not wrong. You talked about cash flow. A very important word today. Okay, so money, cash flow. Some people can say about financial resources. All these are key words that we can look at. Okay, right. So let's go into the topic now. Okay, so our learning goals. Now, what is learning goals? Learning goals are learning objectives. So in this half an hour, half an hour to 45 minutes. I expect to define finance, its major areas and opportunities available in the field, and legal forms of business organization. I think you all know, today's world, there are many types of business organizations. So we will look at some of these. Describe the managerial finance function, its relationship to economics and accounting. So we are going to look at the relationship between finance, economics, and accounting. And then we are going to look at activities of the financial manager of an organization. What do financial managers do? Then we will look at finance as defined as an art or science of managing money. And then we also will explore very limitedly the processes, institutions, market instruments involved in the transfer of money among individuals, businesses, and governments. So this is just a very basic introduction, because finance today is a very important element, and it cuts into every area, whether in business, economy, accounting, talk about IT, every area finance reaches out. So it is something very wide. I can't cover in half an hour everything, but I just want you all to have a feel of it so that you all know why you are studying this very important module. Right, so we look at two key areas of finance in terms of one is the services. We're trying to look at the services, and the other one is career opportunities. So in terms of financial services, today you have institutions, you have associations, you have organizations providing a vast area of financial products. And one key area that we need to understand is what type of advice is available. Okay, so if you go to a bank today, there are professionals there who provide advice on the various financial products. You don't only talk about banks, you can talk about institutions like Employee Provident Fund or KWSP, even SOCSO. Okay, those of you who are involved with Tabung Haji, they also provide financial products. And therefore, the delivery of this service is very important. Now, the other area that we also need to explore is career opportunities. Today, there are a lot of career opportunities in finance. Many of y'all may be working in banks. Some of y'all may be involved in personal financial planning, investment. Some of y'all are involved in real estate. Many of y'all are involved in insurance. So all these provide an avenue for career opportunities in finance. Now, from there, we now look at what is managerial finance. Managerial finance talks about how the management of financial affairs of a company, institution, or association takes place. And the key person that we are talking about will be the financial manager. Okay, so we have a feel of what are the duties of a financial manager. Now, ladies and gentlemen, today you know organizations can fail because of poor financial management. That is the severity of what can happen if an organization does not manage their financial resources well. So the role of the financial manager is extremely important. Without the financial manager, an organization cannot be sustainable. Now, of course, the role can be done by one person. It can be done by a group of people. It can be done by even an organization. It doesn't matter. But there must be one entity, okay, who is involved in the aspect of financial manager. Okay, so we talk about managing financial affairs of any business, whether it's public or private, large or small, profit seeking or not for profit seeking. So, ladies and gentlemen, when we talk about profit seeking, these are organizations formed for the purpose of making profit. But you also have a lot of organizations that are not formed for the purpose of making profit. Example, charitable organizations, religious organizations, okay, service organizations. These organizations are not for profit, but they cannot ignore finance. Why? Because finance is an important element even if the organization does not focus on profit. There are a lot of charities that have gone default because of poor financial management. So it goes back to the fact that finance is a very important role. In fact, to me, in any course, the most important module is the finance module. Why? Because it is necessary. I'm sure you all know, you all manage money, either your own personal funds or your family funds. Can you imagine if your family funds are mismanaged? How is it going to impact your family? What will happen to your family's long-term future? The same way we look at finance as an important and crucial element in any organization. So therefore, anyone who is involved in developing corporate strategy, okay, and improving firms' competitive position must consider the firm's financial resources. They have to consider. Okay. Now, today we have globalization. What is globalization? We talk about business going global. When you set up a business, you cannot only think about your own country today. You have to think about going global because the market is so wide. And then you also have information technology, which provides the platform for you to do business globally. And then you have changing economic and regulatory conditions, which are happening around the world. And that will also impact the role of financial management in an organization or in terms of an association or even an entity, right? Okay, now business organizations, right? So the focus of this module is mainly on business organizations. Okay, so you all may be familiar with this, but anyway, I just want to touch base a little bit. So in Malaysia, we have three main types of business organizations or entities: sole proprietorship, partnership, corporations. And then corporations, you have public and private. Then you also have government organizations, government corporations. So all these are different organizations. So what I've done here is just provide you with a list of strengths and weaknesses of these organizations, which you can read at your own time. Okay, now we continue to look at this role of managerial finance. Okay, and we see how it is linked to another important element called accounting. So the firm's finance, treasurer, accounting, controller functions are closely related and often overlapping. So let me introduce you to these two people. Now, when we talk about finance, we are talking about the role of obtaining and investing the financial resources of the organization. Any company need money. So therefore, the finance manager, or in some companies, they call this the treasurer, must make sure that the financial resources of the company are there, are sustained throughout the life of the company. Now, the second role is the accountant or controller, who is involved in the accounting function. Now, what does the accounting function do? Accounting function is basically to record the transactions. Every transaction that happens in a company must be accounted for. must be recorded and must be approved, depending on the volume, depending on the value. And that is the role of the controller, to ensure that these transactions are recorded and to ensure that there is proper control of the financial resources of the company. Now, ladies and gentlemen, you know about 1MDB. Okay, many of you all have read it. Some of us are fed up of it. But the reality is that the mismanagement that happened in 1MDB caused the whole country to be affected. Until today, many of us feel that the depreciating ringgit, a reason for the depreciating ringgit is because of the 1MDB debacle. So that is what it is. Finance is such an important function in the organization. So in smaller firms, financial manager normally performs both functions. Like for example, if you go to the mama shop, sometimes you'll find the mama, the captain, the owner of the mama shop doing both this, looking after the finance and running the role of a controller as well. But in bigger organizations, these roles are divided depending on the capacity of the organization, the size of the organization, the business activities of the organization. Now, I know that just now, I think if I'm correct, Bilashini mentioned cash flow. One very important element in any organization is cash flow. In fact, for me, the most important element of any organization is cash flow. Cash flow is so important that without cash, the organization is paralyzed. A good example is human beings. Without blood, we are paralyzed. Same way, a business without cash flow is paralyzed. Okay? Many of y'all may equate cash flow to profit, but they are not the same. Cash flow is real cash. Profit is how you interpret your accounts. So an organization may show a huge amount of profit, but zero cash flow. No use. Okay, so the most important thing is how you manage your financial resources to ensure, as I mentioned earlier, your organization is sustained throughout its life. Now, finance and accounting also differ in respect of decision making. Yes, decision making with regard to financial affairs need the cooperation of both finance and accounting. Their roles are different, but you need them to work together, because without finance, there cannot be any decision. Without accounting, there cannot be any decision, because accounting, as I mentioned to you, is the actual recording of the transactions. So before you make any decision, you must check your records. You must check your records to see whether you have financial resources or not. A good example is yourselves. Okay, I'm sure before you sign a check, you will check with your accountant, you check with your bank balance, you check with your finance manager to see whether you have sufficient money before you issue the check. Same thing. So any decision that you make, you will affect the finance function and the accounting function of an organization. Now, today, processing of financial data is mainly automated. I'm sure you all know, some of you all deal with this type of businesses, like e-invoicing, and then you have softwares which prepare balance sheet, profit and loss accounts. So the processing part, not an issue. Okay, but you got to ensure that the correct information is put into the system so that your records, your statements that come out are correct. If you key in rubbish, you are going to get rubbish. So you got to make sure that the input of this information is properly done, authorized, and authenticated. Okay, so that your financial statements that are produced reflect the actual transaction. Now, why is this important? Because these financial statements are the one that the decision makers in your organization are going to refer to. They are the ones who are going to look at the financial statement. So if your financial statement is wrong, what can happen to the decision? Stephen, are you there, Stephen?
Yes.
My question is, if the information keyed in is wrong, okay, and the statements produced are wrong, what is the quality of the decision?
You see, when the information is wrong, therefore the person, the manager, this financial thing, they will make the wrong decision.
Yeah,
Because
very good.
most of the manager people, they make decision based on the answer. And when the whole thing from bottom until up, the whole thing is messed up. So therefore, the manager made the wrong decision.
Thank you. Zoom user, who is Zoom user? Zoom user, who is that?
Sir, I am Jayshree. Rename.
Jayshree.
Yes, sir.
Jayshree, your mic must be muted, Jayshree. Because then it
Thank
will
you.
interrupt. It will interrupt other people. Okay, thank you. Thank you, Stephen, for that sharing. What Stephen said is very correct. Ladies and gentlemen, the authenticity of your financial statements are very important because the decisions that are going to be made will be based on the authenticity, the originality, and the correctness of these financial statements. Thank you, Stephen, for your sharing. Okay, now we go to this important document. Now, this document is called the balance sheet, but the name has changed over the years. Today, we call it Statement of Financial Position. Now, the Statement of Financial Position is a statement that provides information about the company. It's a picture, financial picture of a company at a particular time. Okay, so for example, if you look at Tenaga Nasional, Tenaga Nasional's Statement of Financial Position or balance sheet as at 31st December 2024. That means as at 31st December 2024, this is the amount of current asset that Tenaga Nasional had. This is the amount of fixed asset that Tenaga Nasional had. This is the amount of current liability that Tenaga Nasional had, and the long-term funds of Tenaga Nasional will also be reflected as at that date in that balance sheet. So the balance sheet is a very important tool for any decision maker because they will use that balance sheet to decide how the company is going to move forward in the future. So one of the primary activities of the financial manager is to look at the balance sheet on a daily basis. And this today is not impossible. About 30 years ago, 40 years ago, your accounting was all manual. So for you to get a balance sheet on a daily basis is impossible. But today with automation, your system can update the balance sheet on a daily basis. Okay, but for accounting regulation, every company that is registered must produce their balance sheet every year. They must produce their balance sheet every year. And for companies, Sendirian Berhad or Berhad, these financial statements must be filed with the Registrar of Companies so that the Registrar of Companies has a record of the financial performance of the company. Okay, so this balance sheet or statement of financial position is very important. Now, we are coming to the end of the first part of our class today. And to end this part, I introduce you to a very important term. A term that you have studied before. I think I've covered this in OB. Okay, but I think this is something very important. The word ethics. And when we are dealing with finance, ethics must be followed. Every ethical practice that you have learned must be implemented in financial management. A very good example of this is no gift policy. Many companies today have no gift policy. Now, what is a no gift policy? A no gift policy is a policy by the company whereby the staff are not allowed to receive any gift, or they set a minimum amount for a gift to be received, like 50 ringgit or less. But anything more than that, the staff is not entitled to it. So that is a very good policy, I believe, today, because our country is going all out to fight corruption. As our Prime Minister has mentioned, his biggest task in his tenure as a Prime Minister is to look after the rate of corruption in the country. Okay, and corruption can destroy a country. We have seen this. A very good example is Sri Lanka. If you recall, Sri Lanka went into bankruptcy about 2 years ago. Okay, now they are slowly coming out of it. So that can happen to a country like Malaysia, and that's why ethics is very important. So Malaysia today has a very strong ethical code, ethical conduct, ethical laws to govern its processes. The difficulty is the implementation of it. That is the difficulty. Right. Okay. So we have come to the end of the first part. Again, do not worry. I will send you the slides after the class. Okay. I don't give you the slides before the class is because y'all will read the slides and you will not pay attention. Okay. So I do it this way because then you can pay attention to the slides. You have the notes. I'll give you the notes before the class so that you can read through the notes, and then you can use the slides to do your revision in terms of your assignment. Right. Any questions?
Sir, I have a question here.
Yes.
On your question number 1, number 2, and number 3, it's just that we are going to do the question and submit to you when we are doing the presentation.
Yeah.
Through YouTube. You want us to explain how we got the answers.
You studied OB with me, right?
Yep.
So what did you do in OB?
We did
the same thing. How you got the answers, how you are going to use the answers in the questions is what you are going to present. You may want to take a snapshot of the figures and then explain the figure in your presentation.
All right.
That's what you are going to do. Okay?
Okay, thank you, sir.
No problem, no problem. Okay, right. Any other questions? Okay, good. Right. So we will go straight away into our next topic. And then I'll give you all a break. Maybe 10 minutes down the line, I'll give you a break. Okay, so we go straight into ratio analysis now. Okay, right. So we are going to look at our first major topic. The introduction was just to set the scenario, to look at what we are studying, why it is important, and then what are the different areas. That is what we looked at. Now we are going into the actual elements of finance. And in any organization, financial statements are very important. So we looked at one financial statement just now, statement of financial position or balance sheet. So in this particular slide, I'm going to introduce you to other financial statements, and I'm going to use those financial statements to illustrate to you about accounting ratios, why accounting ratios are needed, and how we as finance people can interpret these accounting ratios. Some of you all may be very familiar with this already, because this is something that you would have caught up in your degree. If you did a degree in business, degree in accounting, or even in doing your diploma in business, you would have covered this topic. But anyway, I'll start from zero, so that everybody is able to understand. Right. So again, I like to start with the learning objectives. Now, what is learning objective? Basically, what are we going to learn in this topic? Okay, so there are three key areas that we are going to look at. Number one, we want to understand who uses financial ratios and how these people use them. Okay, and then we are going to look at ratios in terms of how to analyze liquidity and activity. So we look at this word liquidity. Liquidity means how much of cash or near cash instruments the company has. So when you look at your statement of financial position or balance sheet, one of the areas that you will pay attention to will be your current asset. Current asset are those assets which are less than 1 year. And the value of your current assets are always changing. For example, cash, debtors, then you have inventory, okay, you have prepayments, all these are different types of current assets. So these current assets, the value will change all the time. For example, any business, their cash balance will not be the same. If the cash balance is the same, something is wrong with the business already. So an active business will always have a fluctuating cash balance. And that's what we mean by liquidity. Okay. And then activity of the company. Activity of the company deals with the direct operations of the company. For example, if you're looking at a car dealer, then the activity here will be buying and selling of cars. If you're looking at a grocery shop, the activity will be buying and selling groceries. That's what we mean. Discuss the relationship between debt. Yes, debt is a very important element. Utang in Bahasa Malaysia, and financial leverage. Financial leverage means long-term debt and short-term debt. Okay, and the ratios used to analyze a firm's debt. No, we are not saying debt is a bad four-letter word. No, we are saying that whenever a company or business has debt, it must be managed effectively. And that is important. Right. Okay. So now we go to the first part of this topic, and that is to answer this question. The question we are attempting to answer here is this one here, which basically deals with who are the parties interested in financial matters of the company. So we are looking at different people. So who is interested in the analysis of financial statement? So these are the different people. These are different people. So we have owners. Okay, owners. So maybe we can get some people involved. Anantaraj, are you there, Anantaraj?
Yes, Doctor.
How are you?
Fine, I'm good, Doctor.
Good. Okay, Anantaraj, tell me, why would the owner be interested in the financial statement of a company?
Maybe the owner need to know how profitable is the company and how was the cash flow.
Yeah.
What are the debts?
Yeah.
What are the income?
Very good, Anantaraj. You covered the whole topic already. Okay, very good. So you mentioned very important words. Owner wants to know how much is the debt, what is his share, what is the profitability of the business, how is the business being managed. All these questions will be at the back of the mind. And all these questions can be answered how? By looking at the financial statement. Okay, you can look at the balance sheet or statement of financial position. You can look at the statement of profit and loss. And you can also look at other statements like your cash flow statement. Thank you, Anantaraj. Thank you so much.
Thank you, Professor.
Okay, next one is Geki. Geki, why would customers be interested in looking at the financial statement of a business?
They want to know the money,
Okay.
profit.
Why would the customer want to know about money or profit of the business.
When he purchase something to company, they want to see whether can earn the profit, how many percent
Yeah,
on
but
the
customer
quality.
don't earn profit, ma. Isn't it? You are a customer of UTM space, right?
Oh, it mean
so
we are in customer space.
in the customer's perspective, why would a customer want to look at the financial statement of a company that they make purchases from? Like say, for example, I'm sure you go to Giant, isn't it? You look at Giant's profit and loss and balance sheet.
Giant, no.
You don't look, but are you interested to know or not? I mean, if the statement is available, you will look at it, right?
Yeah.
Yeah, you look at it because you want to know
The
if
quality.
the company is strong enough.
Yeah,
What is
the
the
quality.
quality of the management? Whether the goods and services I buy are good or not.
Good quality product.
Correct. That's why you would look at it. Thank you.
Yes,
Thank you so much. Thank you. Okay, next one. Kumuda. Kumuda, are you there? Kumuda? Oh, Kumuda not around. Zenith Agency. Who is Zenith Agency?
I'm Lee here.
Reed, is it? How do you spell your name, Reed? R-E-D.
I'm Lee Ban. I changed already, ma.
Oh, Lee. Oh, sorry. Oh, you changed already, Okay, because maybe I saw both lah. I recorded Lee Banwa and I also recorded Zenith Agency, both. Okay, never mind. Mr. Lee, why would competitors be interested in the financial statement of a company?
Competitor, competitor, they must know the strength, okay, and of the other company. So if the same competitor, they make sure that if the other company, the financial is not sound, so it's advantage from the other it's advantage.
Very good. So a competitor would want to know what you are doing right. You know, why you are so successful. Correct or not? As a competitor, I also want to know. I look at the balance sheet. I look at the profit and loss of another company because I want to know what they are doing right. For example, if you look at Maybank and Public Bank will definitely analyze Maybank's financials. Maybank will definitely analyze Public Bank financials. They want to know what is Public Bank doing right. What is Maybank doing right? Thank you, Mr. Lee. Right, next one. Jolie, are you there, Jolie? Jolie.
Yes, doctor, I'm there.
Hi, Jolie. Okay, why would employees and their representative want to know whether a company is doing well or not?
To see whether is it potential for the career advancement, this company.
Very good, Jolie. Fantastic. So you want to see your career prospects in the future. I'm sure if your employer is not doing well, you won't stay long with your employer. You'll find another job and leave the organization. Thank you, Jolie, for that. Thank you so much. Next is Sasi Taran. Why would the government be interested, Sasi Taran?
To know how much tax can be collected.
Fantastic, Sasi Taran. Are you involved in tax management?
A little bit, sir.
A little bit. Good. So you will know. As a government organization, the government will want to know how much your company is making profits and whether your company can contribute to the tax coffers of the country. Right. Next one. Community representative. And we have Lata. Lata, are you there?
Yes, I'm here.
Community representative, why you think they are interested in the financial performance of a business?
Okay, to my perspective, I think community representative is interested to know what are the CRS systems that they can contribute or do to the people.
Yeah,
So,
around their community.
Yes, to build up the
say,
community.
Say, for example, if you have a company, a big company in your community, the employment prospects for the people around the factory, the community around the factory will be determined by the strength of that company. If the company is doing well, then they will employ more people around the factory or in that community. Thank you. Thank you so much. Okay, the rest of it I will just roughly go through with you. Investment analysts will want to know about the company's performance because they can provide the right information to their clients. So an investment analyst will want to know the financial performance. Suppliers will want to know the financial performance of a company because it is through that they will be able to supply goods and services to that company and know that they will be able to get prompt payments. Lenders, like banks and financial institutions, will analyze the financial statements of a business before they extend any form of credit to that company. And then managers of that company will want to know about the financial performance of that company because their performance, the manager's performance, will be evaluated based on the company's performance. If the company is doing well, the managers will get bonuses, get increments, and so on and so forth. Okay, right, ladies and gentlemen, I think it's just the right time for us to take a short break. So we'll take a 10-minute break. 10-minute break. My clock shows 9:05. So we come back at 9:15 and we move on from there. Okay, so I'll see you in 10 minutes time.
林然，记得 pass 给我你全部的那个 boarding pass 啊，因为我那个 insurance 要拍完给他。杜姐，你这个866.43，我这跟公司讲，因为我这边收到的信息1亿多，然后你收到的是866是吧？我的 system 也是866，可是 email 收到的是1亿多。嗯，
Okay, welcome back. Right?
我在
Okay.
上课，我在上课，我明天记得再给你知道哈，不好意思。
Sarah Lee. Sarah Lee. Thank you. Okay, welcome back from your break, right? So we are now moving on in terms of understanding why ratios are so important. Okay, and we just completed the section to identify those people who are interested in the financial statements of a company, right? Now, if you recall, one of the topics that we covered in OB was ethics. And under ethics, I'm sure I talked to you about stakeholders. Stakeholders are anyone who has an interest in a company or the company has an interest in them. Now, the slide that you have now are stakeholders. So owners, customers, competitors, employees, government, community representative, investment analysts, suppliers, lenders, managers, all these are what we call stakeholders. Why? Because they have an interest in the company and the company has an interest in them. Same, with competitors also the same. They are stakeholders. Why? Because whatever the company does will affect the competitor. Whatever the competitor does will affect the company. So that's what we are. Okay, thank you very much. I think there's a message there in the chat. Let me see what. Sorry, sir. Oh, no problem, Sarah. No problem. Don't worry about it. Okay, right. So let's move on to the next slide. Okay, so now we look at the financial statements. Okay, so I'll just move this blocker down a bit, and then I'll move it up. Now, in any organization, there are 4 very important financial statements that we must be able to analyze. Okay, whether your own company or you're doing it for your client, it doesn't matter. But these are the 4 key financial statements that you must be able to understand and analyze. So what are they? The first one is the statement of profit and or loss. Up to you lah. Statement of profit and or loss. Or it was previously known as income statement. Statement of financial position, balance sheet is what we've been talking about. Statement of retained earnings and statement of cash flow. Now, I will go through each of these statements now so that you understand the implications, because it's important for you to know. It's important for you to know. Right, we start off with the income statement or statement of financial, statement of profit or loss. Now, this one provides a summary of the company's performance in a particular period. So basically, when you look at the income statement or profit or loss statement, the idea here is that the profit or loss statement will identify the performance of the company. Okay, and this is important because as a shareholder, as an employee, as a manager, you want to know the performance of the company, and it is through this statement that you will understand. So now I'll show you an example of a profit or loss statement or income statement. Okay, basically these are the components. So you have your sales revenue, less your cost of goods sold, you get your gross profit, less operating expenses, then you have your operating profit, less your interest, net profit before tax, less tax, you got your net profit after tax, less preferred stock dividend, you have earnings available to common stockholder. Now in Malaysia, we call these ordinary shareholders. But because we use an American book, Americans prefer to use the word common stockholder, but we can use the word ordinary shareholders. This is the profit that will be going to the ordinary shareholders. Okay, the next statement, also important, and I've been mentioning this for a few times already, is your balance sheet. Okay, the balance sheet, or today we call this the statement of financial position. Why? Because the statement of financial position will provide information on the financial position of a company at a particular time. Okay, and this statement is very important because it gives you information on three critical areas of the business. Number one, how much of assets the business owns. What is the equity or the investment of the owners in the business? And what are the liabilities of the business? Liabilities means debts. The debts of the business can be short-term or long-term. Can be short-term or long-term. And the balance sheet looks something like this. Or statement of financial position looks something like this. So you have current asset. So I mentioned to you about current assets earlier. Current assets are assets of the company that the value will change very frequently. These are what we call short-term assets. Okay, short-term assets. And they are cash. Okay, cash. I'm sure all of you all know cash. Marketable securities means investments of the company in shares. So maybe the company has marketable securities that they have purchased, okay, in the name of the company, and these are kept with the company. So if the company wants money, all they have to do is take the shares, sell it in the stock exchange, they get the money, and then they can use the money. So that's why we call this current assets. Accounts receivable or debtors, okay, inventories or stocks. Now in Malaysia, we some companies use the word stock, but because we are using an American book, we call these inventories. Now, when you add all these together, then you will get your total current assets. You had your total current assets. Now, then you also have your fixed assets. What are fixed assets? Assets of the company that value does not change within one calendar year. So you have things like land and building, machinery and equipment, furniture and fixtures, vehicles. Okay, and there can be others, including leases and things like that, which can also be listed as fixed assets. So these assets, the values won't change. Okay, and normally this asset also has depreciation. What is depreciation? Depreciation is basically the writing down of the value of asset because of its usage. So you use the asset, the value will drop, so that will be your depreciation. Okay, so you have to recognize depreciation in your books. So your gross fixed asset minus your accumulated depreciation, that will give you your net fixed asset. Okay, so your net fixed asset add to your current asset will give you your total assets. So this is a very important figure, total assets. So that is the figure that you will look at. That is the figure that you will look at if you want to identify what are the assets of the business. So I repeat, assets of the business are divided into two categories, current assets and fixed assets. Current assets, the value will change on a daily, weekly, or monthly basis. Okay, fixed assets, values don't change. They are there. So for example, if the company has invested in furniture and fittings, so the value won't change because you're not trading in this item. Okay, if they buy a vehicle for the company, the value won't change. It will depreciate, of course. That one you recognize through depreciation. Any questions so far? Am I going too fast?
Professor, one question, Sasi here.
Ah.
Professor, for example, if let's say the land and the buildings purchased, if let's say they're appreciating in value year by year, so which value do you use for your accounting purposes?
You see, the best way to do this is to get a valuation. You see, so what you do is maybe the depreciation you provide for land and building will be a small amount, say maybe about 2% a year. Okay, you still depreciate because your building depreciates, correct or not? So you still depreciate, your depreciation value will be 2% every year or 3%. Then after 5 years, what you can do is you invite the valuer to come and revalue your asset. Then you get the valuer to give you a certificate that will recognize the revaluation of the asset. Then you can inflate the value of the asset, and the recognition of that increase will be capitalized.
So it doesn't have to be done on yearly basis?
No, it's done on a yearly basis. Yes, every year you depreciate 2%. Then
No, I mean the valuation.
No need to do every year. Yeah, you
Okay.
do every year, die, oh.
So you read.
You set your depreciation at 2% or 3%. Okay, like vehicle, you cannot set at 2% or 3% because your vehicle depreciates faster, isn't it? So your vehicle, you depreciate at 10%. But your land and building, because of the probability of the value increasing, you depreciate at a smaller amount. And then after 5 years or 10 years, you call the valuer to come and value your property. Then your valuer will recognize it.
Thank you, Prof.
No problem, no problem. Okay, any other questions? Okay, let's move on. Right. Now, the next area that we are going to look at is the liabilities and the stockholder equity. So as mentioned to you earlier, liabilities are owings of the company. Owings of the company. And equity is the investment by the shareholders. They have invested in the company. Now you have to recognize their investment in the statement of financial position. So in the statement of financial position, you have several components here. So the two liability items, you have two liability items here. The first liability item will be your current liabilities. So current liabilities are liabilities, the value of which changes every day, every week, every month. So as long as the value changes, you recognize it as current liabilities. And what are these? Accounts payable, notes payable, and accruals. Okay, accounts payable are your creditors, are your trade creditors. Notes payable means you issue a note or a guarantee that you will pay them back. And then accruals are those things like electricity bill that you are owing. Sometimes your overtime you haven't paid yet. You recognize these as accruals in your account. So all these added together will be your total current liabilities. Okay, so again, current liabilities are assets, the value of which changes on a daily, a monthly, a weekly basis. Right? Now, your company may also have long-term debt. Long-term debt means debts which value doesn't change over 1 year, 2 years. These have to be recognized too. Okay, so these will be termed as long-term debt, and then you put it as an item. So you may have financial leases. So for example, the company may lease equipment, may lease vehicles. Instead of buying the vehicle, they lease the vehicle. So that one also you have to recognize as a long-term debt. So that is on the liability side. So liability, as I said, got two types, current liability and long-term liability. So you add these two together, you will get your total liability. So what is liability? Liability is owings of the business, owings of the business that are owed to third parties. Owings of the business that are owed to third parties. So anyone you owe money to, you have to recognize it as either a current liability or a long-term liability or long-term debt. Okay, so that is liability. Now, besides that, you also have another person that you own, that you owe, and that is the owners. That is where the equity is. So the business owes money to the owners. The owners have invested money in the business. So now you have to recognize that in your statement of financial position. And these can be broken down into few items. Number one, you have preferred shares or stocks. Now, preferred shares or stocks are special shares or stocks which are issued by the company. And this type of shares or stock have what we call fixed dividend rate. Okay, so the dividend rate is mentioned there, and then the par value or the issue value of the preference shares and the number of preference shares are all mentioned in the name. Now, the word cumulative means if you don't pay the 5% this year, next year you have to pay for 2 years, this year and next year. So if you have cumulative preference shares or preference stock, that means if you don't pay dividend in 1 year, the next year you have to pay 2 years dividend. That's the meaning of the word cumulative. Now, the reverse of this will be non-cumulative. Non-cumulative. Now, what is non-cumulative? Non-cumulative means you don't pay this year, okay. Next year, you only have to pay next year's dividend. Okay, that's why it's important to indicate in the name. So preference shares will always have this indication, i.e., whether it's cumulative or non-cumulative, together with the percentage, together with the par value, and the number of shares issued. Okay, now what is this? Authorized or issued? Authorized means the government or the registrar of companies has allowed the company to issue these shares. Okay, and the company has totally issued all of them. So sometimes the authorized amount can be higher than the issued amount. That means, let's say, for example, the company may have authorized 3,000 shares, but they issue only 2,000. That means they still can issue another 1,000 shares. That's what it means. Now, common stock or ordinary shares, these are ordinary shareholders. They don't have a fixed rate of dividend. They have the par value and the number of shares together, what is issued and outstanding. Okay, and maybe the year indicated. This one, now if you recall, ordinary shareholders, their dividend rate is not fixed. It's up to the company. This year, they got a lot of money, they pay higher. Like for example, I just listened to the news yesterday. It was, I think, OCBC Bank. OCBC Bank paid almost $1 dividend to their shareholders. So if you own 1,000 shares in OCBC Bank, your dividend will be $1, $1 Singapore dollar or something like that. You know, so that is what they're talking about. So it's up to the company. The company has made a lot of profit. They will pay ordinary shareholders a huge dividend. Companies don't make much profit, then that particular year, they may not pay dividend, or they may pay a reduced dividend. Okay, the next item there is what we call paid in capital in excess of par on common stock. Now, sometimes when a company issues ordinary shares for the first time, they will collect more than the par value. Like say, for example, the par value or face value is $1, but they issue the share at $2. That means they got extra $1. That extra $1 is like a saving for the company to use, a reserve for the company to use. That is what we call paid in capital in excess of par. Now, this one, previously, it was known as share premium. Share premium. So share premium basically means that when a company issues shares, they collect more money than what is the actual value of the share. That is called share premium. Okay, then in this case, the company also have retained earnings. Now, what is retained earnings? Retained earnings are earnings of the company that they have collected over the years. Okay, like last year, the year before last, all their retained earnings, they keep aside. And then they use that money in terms of future dividend, or they may want to use that money for future expansion. A good example is during COVID-19. A lot of companies didn't pay dividend. Why? Because they were very worried of uncertain times. So therefore, they put the money aside. After COVID, then they paid huge dividends to their shareholders. Okay, so when you total up all this, that will be your total liabilities, your stock, and your stockholder equity. So that is the statement of financial position or balance sheet. Any questions? Okay, right. So we move on. Now, if you got any questions, you just interrupt me. Don't worry. Okay, we are all familiar with each other already by now. Okay, right. So now we go to the next statement, statement of retained earnings. Now, this statement is a statement which highlights, okay, the amount of earnings the company has in their asset, in their possession. Sorry. So over the years, whatever that they have, the earnings that they have accumulated into this statement. Okay, so for example, your statement can look something like this. Okay, so this is an example of a statement of retained earnings. So here you have retained earnings balance plus net profit after tax, and then you have your cash dividend, then you have preferred stock dividend, how much you paid, common stock dividend, how much you paid, total dividend, and then retained earnings balance. So this is how much the company has. So they started the year with 1012. Okay, and then during the year, they added to their coffers net profit after tax. Then they paid out dividend. Okay, so the total dividend they paid out is 108. And then now they have retained earnings 1135. This amount will be carried forward to the next year. Okay, the next statement that they have, or very important, is your statement of cash flow. And I told you, this is one of the most important statements. Why? Because cash flow is important to the business, more important than profit. A company doesn't make much profit, but they got huge cash flow. It's good, they are healthy. But a company that makes huge profit but does not have any cash flow is in danger of becoming insolvent in the near future. So the statement of cash flow looks something like this. Okay, it is broken up into three parts. Cash flow from operating activities, that means cash flow from the activities of the business. Cash flow from the activities of the business. For example, if you have a provision shop, so provision shop will have their daily operations. So their daily operations, whatever that they buy, they sell, whatever in their stock, all those things will be accounted for in their cash flow from operating activity. Then you have your cash flow from investment activity. That means the company has invested. For example, one of the most important investments that a company makes is its fixed asset. Okay, or they may want to make investment in other firms. So these are all recorded here. Now this is important because it is through investments that the company also is able to add value. And then finally, you have cash flow from financing activities. So for example, notes payable, or they may have increase in long-term debt. That means they have borrowed money, or they have changes in stockholders' equity. They may have dividends paid. Any cash transactions involving these items will be recorded under financing activities. Now you break down this because when you want to analyze, then you know what is the cash flow coming from operating activity, what are the cash flows coming from investment activity, and what are the cash flows coming from financing activity. Now, as I mentioned to you all earlier, and I'll repeat again, cash flow is very important. It is more important than profit. So if you want to understand or want to reconcile your accounting profit with your cash flow, then you have to add back depreciation. Now, remember, depreciation is not a cash item. What is depreciation? Depreciation is the write-down of value of assets. So the asset value is still in the company. So you are just moving the money from the left pocket to the right pocket. So what you are doing is still keeping the money, but it is accounting entry to recognize accounting profit. Okay. And then you also have free cash flow. Free cash flow is an important element for investors. Okay. This is the amount of cash flow available to debt and equity holders after meeting all operating needs and paying for all its fixed asset investment, okay, and net current asset investment or net working capital. So free cash flow is after tax cash flow from operation minus the change. This triangle means change in net working capital minus change in net fixed asset investment. Okay, this is just for you to understand. Okay, right. So now we are going into the ratio analysis and we ask ourselves this very important question. Why? Why do we want to do ratio analysis? Very simple. Number one, we want to identify what are the areas of the business what is the weakness of the business, what is the strength of the business. And we want to know how the company is performing in relation to other companies or in relation to its past performance. So you want to see whether the company is growing or not. And that is one area that ratio analysis can help you with. Okay, so you can make comparisons between one company and another company. And then you also can use the ratios to identify weaknesses and correct any issues or problems. Okay, so what type of ratio analysis are there? There are a few types of ratio analysis. Okay, there are a few types of ratio analysis. Now, the first one is we call this trend or time series. Trend or time series means we want to look at the performance of the company over a couple of years. So, for example, you want to look at Tenaga Nasional. So, Tenaga Nasional, you want to compare from 2020, 2021, 2022, 2023, 2024. That is called trend or time analysis, time series analysis, i.e., you are evaluating the performance of the company over the years. Now, then you may also want to look at cross-sectional analysis. That means you want to compare different departments in your company. So, for example, banks. Okay, you can use ratio analysis to compare the performance of bank branches. So, for example, Maybank City Square. Okay, you can compare Maybank City Square with Maybank Pelangi. You can compare with Maybank Kulai. You can compare with Maybank Pemas Jaya. So within the same organization, you can compare the performance. Now, you can also have industry comparative, i.e., you want to compare different companies in an industry. Now, sometimes a particular industry may have the performance of all the company, they analyze it and come out with average figures. So you want to compare your company with your industry average. That also is possible. Okay, so that's another way of comparing performance. And finally, you have benchmarking. You may want to compare certain statistics about certain aspect of your business with other businesses. So for example, DHL warehousing want to compare with Post Laju warehousing. So you take one section and compare with your competitor. Why you are doing that? You want to find out what are the areas you are doing better than your competitor, what are the areas are your weaknesses, and what are the areas are your strength. So from that, you can improve. So these are different types of ratio analysis that you can do. Now we go into the ratios themselves. Okay, now there are a few categories of ratios. Okay, so the first one is profitability, where you want to know whether your company's profitability performance is improving or not. You want to look at efficiency. You want to look at liquidity. Liquidity, as I told you, how liquid or how cash ready is your business. You know, in case you have a crisis and you need to convert your inventory to cash or your debtors to cash, can this be done or not? So that is where you look at liquidity. And financial gearing will mean your borrowing, and then investment. This one mainly for your shareholders. They will want to know what are your investment ratios. So we go through the ratios now, okay? And these figures that I'm taking, you see this current ratio, these figures that I'm taking, they all refer to the financial statements that we saw earlier. So you can look at the financial statements that we saw earlier, and from there you can identify. Okay, so for example, current asset, fixed asset ratios and all that, we take the figures from here. Okay, so if you do your revision later, you can want to know where the figures come from. The figures come from there. Okay, now we go into the ratios itself. Okay, we go into the ratios itself and we start with the most popular ratio, current ratio or working capital ratio. Now, this ratio is used to measure the total current asset over the total current liability. You want to know how much is your current asset over your current liability. Firstly, any business, for it to be solvent, their current asset must be more than their current liability. So in this business, their current asset is 1233 and their current liability is 630. So that means their current asset is 1.98 times more than their current liability. Why is this important? Why is this important? This is important because if the company is in financial difficulty, and they are required to pay their current liability, this company got no problem because they can liquidate their current asset and pay their current liability. So any investor who want to invest in this business will like this figure. 1.98 is a very good figure. In fact, if you look at a benchmark, I mean, it's not a rule of thumb, okay? But normally, if you look at benchmark, you must try to aim to have your current ratio at 2 times your current liability, okay? So that at least you are able to meet your current liability obligations with ease. Okay, again, I'm saying this is not a rule of thumb because it depends on the business. Certain businesses you have which are very cash businesses. So cash businesses, you don't have much credit. So they may want to have a current ratio of maybe 2.5 or 3. Now, some businesses are credit businesses. Then you may want to have your current ratio 1.7, 1.6, I think is quite okay. But try not to go below 1.5, dangerous. Try not to go below 1.5. Okay, the next ratio, very similar to your current ratio, except that this time we take out the inventory. So the current asset, remember I told you, includes cash, includes your prepayment, includes your notes, investment in stock market, includes your inventory. But you want to take out your inventory. Now, the reason why you do this is because inventory is the slowest to be converted to cash. Inventory is the slowest to be converted to cash. In fact, many businesses have today out-of-date inventory items, and this can affect their liquidity. So that's why quick ratio is a very good and useful ratio to look at. So if you compare the two ratios, here is 1.98. But when you do the quick ratio calculation, you have 1.52, which is also not bad. So it's not bad. You have taken out your inventory, still you got 1.52. So basically, you must try to avoid going lesser than 1.2. Going lesser than 1.2, because then your business may have issues pertaining to liquidity. Okay, any questions? Everybody has been so quiet. I'm worried whether you all are confused or I'm going too fast. Are you all okay? Venu, are you there?
Yes, Professor.
Hi, Venu. Okay, you compare these two ratios,
Mhm.
current ratio and liquid ratio, quick ratio, two liquidity ratios, current ratio and quick ratio. What is the difference? What is the difference between the two?
Quick ratio is minus the inventory.
Why you minus the inventory? Sorry lah, Venu, I know it might be it might insult your intelligence, but I just want to know whether you're following or not. Okay, so why do you take out the inventory?
Due for the what they call
No, because inventory is the slowest
Slowest.
to change to cash.
Correct.
So companies, especially nowadays when you are dealing with a lot of IT equipment, you got to be very careful because IT equipment tend to go outdated very fast, go out obsolete very fast. So
Yeah.
you got to make sure that your inventory is up to date. You know,
Yes.
if your inventory is out of date, you have to write it off. Okay, and then you also, like for example, if you're talking about Lotus and Giant, these are companies which need to keep an eye on their inventory because they got expiry date. You understand? So expiry date can also affect whether your inventory is up to date or not. Okay.
Yeah.
Okay. Thank you
Okay,
very much,
Professor.
Venu.
All right.
Thank you. Because I just want to know you all around or not. Okay. Right. So Venu has proved me wrong. So let's continue. Right. So inventory turnover is looking at inventory or your stock. So the formula is cost of goods sold divided by inventory. So basically, this one you want to know whether your inventory is moving fast or not. If your inventory is moving fast, very good. You know, some companies, the inventory is moving very slow. That can affect your business. Now, another similar ratio that you can use is average age of inventory. Now, you notice for average age of inventory, it is in days. So you want to know how frequently your inventory is changing in your storeroom or warehouse. Now, this is very similar to the earlier ratio, inventory turnover. You see 7.2, what you are doing is you are converting it to days. So you want to know how frequently is your stock changing. So in this case, your stock is changing once in 51 days. Once in 51 days. So this is not that bad. Of course, shorter, better lah. Shorter, better. Now, another one that you can look at is days sales of inventory. So this one is you are taking the ending inventory, multiply by 365 over cost of goods sold. Okay, so your days of inventory in this case is 51 days. Okay, so you just be aware that your sales of your inventory is 51 days. Now, average collection period, this deals with your debtors. So how frequently are your debtors paying you? So here they are paying you at an average of once in 60 days. So you take your accounts receivable amount divided by your net sales divided by 365 days. So you get the figure of 59.7 days or 60 days. So once in 60 days, your creditors your debtors are paying you. These are collections, so it's debtors. Payment is for creditors. How frequently are you paying off your creditors? So here you take your accounts payable. Because it's accounts payable, your denominator will be annual purchases. So annual purchases divided by 365. So 382 divided by 0.7 multiplied by 2088,000 divided by 365. So you get 95.4 days. So 95.4 days is something like 3 months. So I think for this company, the creditors are very patient. 3 months. So if you want to compare, you would compare your receivables with your payables. So your receivable is 60 days. Your payable is 95 days. Very good. Okay, so you can collect from your debtors and pay your payables. Now, 95 days is also, I mean, as a creditor, I won't be happy with you lah. You take 3 months to pay me back. So maybe what you can do is, if you are doing the analysis for this company, tell them to maybe bring this down to maybe 70 days. That would be good. So then at least you know that you can collect back from your receivables, which is 60 days, and then 70 days, 10 days later, you can pay your payables. So this will be a better ratio to have. Now, turnover asset, total asset turnover is net sales over total assets. You want to know how effectively is your company using your assets. The company has a lot of assets, right? You got current asset and fixed asset. So is the company using the asset in an effective manner or not. That is why you will look at this ratio. Okay, then you have total asset turnover ratio, net sales over average total asset. So you take the opening balance of your asset plus your closing balance divided by 2. Okay, so this one you get your total asset turnover ratio as 8.96. Okay, now you also have this comparison here that we can make between a company which has no debt plan and a debt plan. Okay, that means a company got no utang and a company with utang. And from there you will note whether this company's return on equity is good or not. So if you see if a company has got no debt, their return on equity is 14.4. But if a company got debt, their return on equity is 21.6. Okay. Kumuta, are you there? Kumuta?
Hi, sir.
Okay, Kumuta, you compare these two, which one is better? 14.4 or 21.6?
21.6, sir.
Yes, very good. Why this company is better is because this company has a debt plan. You see, they borrow money. Okay, so when they borrow money, they use borrowed money, and because they have borrowing, they use their funding more effectively. Here you see this company equity is 50,000. Here they got debt 25 and equity 25. So therefore, because of this, they are able to have better return. So this slide just want to emphasize one very important point. Having debt is not bad. You can effectively manage your business by managing your debt, and therefore you can have a better return. Okay, so we move on. Okay, now we go to financial leverage and gearing ratios. So as I told you earlier, debt is a very important element. So when you want to calculate your debt, a very important ratio to have will be your debt ratio. So your debt ratio is total liabilities over total asset. Okay, so here the company's debt ratio is 45.7%. That means, okay, 45.7% of their total asset is financed with debt. Not bad, it's good. The balance is coming from equity. Okay, now other ratios that you may have are times interest earned ratio. This ratio tells you about earnings before interest and tax divided by interest. So this ratio is very important to indicate whether the company can service their interest or not. You know that company must service their interest. When you borrow money, you have to pay interest. So the question is this company able to service their interest? In this case, very good, 4.5. So that means 4.5 times their interest is their earnings. So their earnings is higher, 4.5 times their interest. Okay, now other ratios, again, you have your profitability ratio here. Profitability ratio, one of the most important one is your gross profit margin. So you take your gross profit divided by your net sales, that will give you your gross profit margin. And then you also have operating profit margin. Here, your earnings before interest and tax divided by net sales. Okay, and then you have net profit margin, earnings available to common stockholder divided by net sales. Okay, so all these are what we call profitability ratios. Now, besides that, you also have earnings per share. This one is earnings available to common stockholders divided by the number of shares outstanding. And then you have return on total assets, also a profitability ratio. Earnings available to common stockholder divided by your total asset. Now, besides that, profitability ratio, another important one is return on equity. Now, this ratio is important to shareholders. Shareholders want to know whether the company is effectively earning enough to cover whatever expenses, whatever liabilities they are. So they are looking at it in terms of their total equity, whether the earnings they are getting is good or not. So in this case, I think it's very good, 12.6%. You compare this with your fixed deposit. Fixed deposit, you nowadays you get maximum also 3 to 4%, maybe 5%. This company can have a return on equity of 12.6%, which is very attractive. Now, besides that, you also have market ratios which are important to shareholders. This is called your price earning ratio. Market price per share of ordinary stock, ordinary shares or common stock divided by earnings per share. Okay, and you also have market to book ratio. These can also be calculated, where market price per share of common stock over the book value of share of common stock. So in this case, you have 1.4 times. Now, to summarize, I have prepared a summary here so that when you go through the slides, when I send it to you, you have the ratios, you have the formula, and you have the comparison for each year. So you can see how I rate it, whether they perform okay or good or poor. So you will notice from here that this company, when you compare 2007, 2008, 2009, their performance is not good. Why? Because it is increasing. Collection period, your days you're collecting from your debtors is increasing. 43, then went to 51, then 59. So this is something that is not very good. And then when you compare with the industry, you remember I told you you have industry average. When you compare with your industry average, it's only 44.3. So the company now can see this as a cause for concern and take effort to improve. Okay. Now, if you look at the payment one also, average payment period also, not good. It's increasing from 76 to 81 to 95. And the industry average is 65. So these are signs that the company may be having financial difficulties. That's why ratio analysis is very important, because it can help you to identify problems in the company. Like for example, this company has very good liquidity. Their liquidity ratios are not bad. Okay, and in fact, if you look at their 2009, 1.51 compared to industry average is 1.43. This is better than the industry average. So when you look at this type of a comparison, you'll be able to identify specific areas of concern that you need to look at. Okay, right. So we now move on. So there are two sets of slides here. You can go through them. If you got any questions, you can ask me next week. Now, the last slide before we end is limitation of ratio analysis. Okay, now I told you that ratio analysis is an important tool. But like every other tool, it also has its weaknesses. Okay, so number one weakness is that it is historical information. We are looking at the past. Okay, so what happened in the past may not happen in the future. Okay, but we got no other comparison. So that is why we look at it. So therefore, as financial analysts, we must be aware that there are certain ratios that, especially historical ones, okay, which may not be repeated in the future. Now, ratios are also subject to inflation because we are dealing with money. And then changes in accounting policy. When you are comparing one company and another company, there may be different accounting policy. For example, different method of accounting for depreciation. Okay, different method for accounting for bad debts. All these can affect your credibility of your ratio analysis. Then you can have operational changes. For example, certain periods of time, you may have certain seasonal products compared to other companies who may not sell seasonal product. Okay, and then you have seasonal effects. Like we had companies, like if you have companies that have subject to the 4 seasons, summer, winter, autumn, so on and so forth, then you must need to take account of that. And then the last one you must be aware of is financial statements are subject to manipulation. Always remember that. So you must make sure that when you are analyzing the financial statement, it is audited. Okay, so in Malaysia, we are lucky. All companies need to conduct audit on their account, and you must ensure that the audited reports are signed by the auditors, the internal audit committee, and the board of directors. So these are all there, but still a lot of manipulation can happen. So whenever you look at financial statement, it is good to understand the company, understand the business before you analyze. Now, I will, of course, be giving you a set of notes for this. So look out for this together with the slides. Okay, I will I will WhatsApp the slides to you shortly together with some notes on this area. Okay, so we have come to the end of our session today. Any questions? I think some of y'all may have a headache now, isn't it? Okay, never mind. Don't worry. Don't worry. We will be seeing each other next Tuesday. Okay, so next Tuesday is our next class. Please go through the notes. Go through the printout I gave you earlier, and I will now forward you after the class. I'll forward you the slides. So go through all this. Okay, at the same time, start your group discussion on your assignment. Start early so that you all know what to do. And then our next class on Tuesday, then I will cover cover other areas. Now you can of course ask me questions. Please make sure if you have any issue, come back to me and I'll try to help you. Right, okay. Any questions before we end? Sasi, you look confused. Are you okay or not?
Still okay, sir.
Still okay, Wow, good, I like that smile on your face. Okay, good, good. Keep up that smile. Okay, thank you, Sasi. Jayashree, okay.
I'm good, sir.
Good, okay. Don't worry. We are just starting, so we still got a lot of time. So that's why I'm very transparent. I'm giving you everything today so you all can plan. Now come back to me on Tuesday. If you got any issues, we will discuss. Okay? Right. So I will end class because today I took 10 minutes of your time. Very sorry. Okay, but I managed to cover this area because it's an important topic. Okay? So I look forward to seeing you on Tuesday. Okay?
Okay, Professor.
Okay. Take care, everyone.
Good night.
Bye.
Thank you, Professor.
Bye.
Thank you.
Good night.
Good night.
Okay, good night.
Okay,
Good
good
night.
night.
Oh, thank you, sir.
Thank you, thank you, thank you, everyone.
Thank you, Professor. Good night.
Thank you. Good night. Good night.
Thank you, Professor. Good night.
Good night.
Good night,
Good
Prof.
night.
Thank you.
Good night.